Hey everyone, and welcome. Today we're going to pull back the curtain on fine art insurance. If you've ever gotten a quote that looked just perfect, only to get that final bill and feel your jaw hit the floor, well, you're not alone. Let's dig into exactly why that happens, and more importantly, how you can take control of it.
And this, right here, this says it all, doesn't it? There's nothing worse than getting an invoice that feels like it came out of left field, packed with surprise fees you never saw coming. So our goal today is simple: to arm you with the knowledge to get a bill that actually makes sense from the very beginning.
So here's the culprit. That first number, the one that seems so reasonable? Well, it's often missing a bunch of mandatory state taxes and fees that can easily tack on an extra 5 or even more to your premium. It's like that feeling when you get to an online checkout and suddenly the price jumps. It's that, but for your art collection.
All right, first things first. Let's visualize the core of the problem. That huge gap between the quote they show you and the bill you actually have to pay. Okay, so look at this. On the left, you see that clean, simple number from the quote. Looks good, right? But then, on the right, that's the reality that hits your inbox, suddenly loaded with these extra line items. So what in the world are these charges, and why weren't they on the quote to begin with? Let's break it all down.
So let's start decoding that final bill. It's time to shine a light on the two most common hidden costs that trip people up.
First up, you've got this thing called the surplus lines tax. Now, because fine art is such a specialized risk, it's often covered by insurers that are called non-admitted. And guess what? States charge a special tax on these kinds of policies. This isn't some optional fee your broker is adding. It is a 100% non-negotiable state tax.
And it doesn't stop there. On top of that tax, a lot of states also add a stamping fee or service fee. You can think of this as a processing charge. It's what the state regulatory office charges just to file and oversee these specialized policies. It might seem like a small percentage, but trust me, it absolutely adds to the bottom line.
Now, this is where it gets really interesting. Just look at how much these fees change from state to state. In California, you're looking at about 3%. But jump over to Texas, and it's almost 5%. Florida's even higher. And then you've got New Jersey with a whopping 5% tax. It just goes to show you where your collection is located matters a lot.
So let's see how this math plays out. Say you get a nice, clean $4,000 premium quote in California. Well, after you apply their 3% tax and their little stamping fee, that number instantly inflates to over $4,100 on the final bill. And that, right there, is the gap we're talking about.
Okay, so you can't really argue with the tax man, but that doesn't mean you're powerless. Let's talk about the things you can control. The powerful levers you can pull to lower your base premium before those taxes even get a look in. And check this out. This chart shows you the impact of just one of those levers, where you store your art. For a $1.2 million collection in California, just look at that difference. By switching from standard home storage to a museum-grade facility, you could see nearly $500 in savings every single year. That's a huge drop.
So let's quickly recap the 3 main levers you can pull. First, like we just saw, upgrading your storage can give you a really significant discount. Second, just raising your deductible a little bit can get you a nice rate credit. And third, really managing how often your art is on the move, your transit time. That can shave another 4 to 8% right off the bill.
Now, beyond pulling those levers, you can find even bigger savings by just getting a little smarter about how your policy is structured in the first place.
This is a really critical decision. I mean, a basic homeowner's rider might seem like enough if your art just hangs on the wall and never moves. But the second it travels, and I mean even just twice a year for a loan or a show, you really need a dedicated fine art policy. These things are built for movement with what's called nail-to-nail coverage, which is something a standard rider almost always excludes.
So within that fine art policy world, you basically have 2 main options. Blanket coverage is fantastic for a collection where the items are all of a relatively similar value. But if you have 1 or 2 pieces that are just way more valuable or unique, scheduling them individually can actually end up saving you money. And if you're wondering when to make that call, here is a super simple visual rule of thumb. If any single piece in your collection makes up more than a quarter of the total value, it is absolutely time to talk to your broker about scheduling it on its own. A lot of the time, this actually moves the rest of your collection into a cheaper rate category. It's a great trick.
And finally, no matter what structure you choose, you have to confirm that these 4 clauses are in your policy. Agreed value locks in what a piece is worth ahead of time. Nail to nail, we know, is essential for transit. You've got to make sure breakage isn't stuck with a tiny sublimit, and mysterious disappearance is absolutely crucial for any art that travels.
All right, let's bring all these pieces together. It's time to build a final number that you don't just pay, but that you completely understand and can confidently defend.
See, it's a pretty logical flow when you lay it out like this. You start with your specific inputs, your state, your collection's value. Then you build your coverage card, making sure all those key clauses are checked off. And only then do you arrive at a final transparent total where the premium and all the state fees are clearly laid out. No surprises. And to make this as simple as humanly possible for you, here it is. This one sentence is all you need. You can literally copy and paste this into an email to your broker. It immediately asks for the right comparisons and specifies the most important clauses, setting you up to make a clear, informed choice.
So, we'll leave you with this one question. After everything we've gone over, I want you to go look at your current policy. Is every single line item on that bill clear? Do you truly understand how you got to that final number? If the answer is no, well, you now have the tools you need to go out and get a bill that you can finally, truly explain.